Here's a quick look at a set of symbols that we'll be working on this weekend for boot camp, starting with the Thursday night trade framing for decision making on Friday as part of a continuous portfolio management. This is a subset of our usual set. So you can see plenty of them are in monthly spring. We have just one that's in a weekly spring. That's EWW. One in the summer for daily, a couple in the fall, but mostly in the winter. That's almost a market condition subset for us to consider right there. So let's just go in sequence by alphabet. So Alcoa had a nice move up, gained, took an intraday, kept a piece overnight for the swing, exited. On the collapsing RLXD here, we got short. So now the situation is we've got an entry around 21 short off an initial risk of about $1. Our stop is at 1973 at the top of the dragon, and we've had the RL10 is flattening out, and we ended in a doji. So what is our strategy going into Friday for that position? Caterpillar. We took a long position today after a long turn. Yesterday was a doji. Today was moving out. We took the 1, 2, 3 entry. Stop at the belly of the RL10. So we're holding this position. That's where we identified a second and a third potential swing entry on the way up. So we need a trading plan to manage that trade position. Cliff Natural Resources. We're long on the RLXD and a breakout above the dragon with a wide stop at the belly of the 10. Our target is up here at the Z plus 1, so we need a trade frame and a strategy to manage that one. Cut is the timber ETF. We had a 1, 2, 3 entry. We took a second position when it broke above the PSAR, and that made the PSAR flip. So our initial so we have a double swing scoop that was paid for with markets money from that first position. So there's no portfolio risk other than markets money at risk here. And our stop is still at the initial belly of the RL10. That's the hump of the dragon up here at the blue line for reference, which is also the 200-day moving average. So we need a strategy for that. Diamonds, the Dow 30 Industrials. Next up. We just need a trade frame on that one. We did not take a position, but the RL10 has turned. The 200 is rolling up. The river is sloping gently up. We're just below the RL270. There's the 90 sloping down, the 30 sloping down, but the 10 has turned. So we need a trade frame and a strategy for that. Devon Energy, mid-cap U.S. energy company. Our short on this RLXD and then a continuation, the collapse at the RL270. Our initial risk was at 25.36, so it was about $1.50 of initial risk, and now we're down here at 20.83. It just broke through this posture and had a bad day, so we need a strategy for that. Is that a second position? Where do we put the stop? What's our plan to exploit weakness in energy? EFA, there is a belly of the 10. We didn't take this entry, but now we should consider what to do. That's what that blue line means. We need a strategy for EFA, buy, hold, or sell, and what's the trade frame. EWA is Australia. We want a strategy for that one. Nothing so far. I'm sad that I'm not in that already. Mexico. We got the initial entry here as an intraday hybrid frog and kept a piece overnight. Considered adding a second position but didn't. Now we have this posture with an initial swing risk here. That swing position is paid for with markets money, so no risk to portfolio. This is markets money only, and that's where we actually need a strategy. Brazil. Now you'll notice that EWW was also weekly spring and a fall on the daily, so that's relatively strong. EWZ Brazil, no trade taken today, no open positions. There we are Need a strategy for Brazil. Home Depot. We took a long entry on a 123 and a breakout above the RL10 with a stop at the, that's slightly off, that should be at the belly of the dragon right there. So about $1.50. Sorry about that. And that's the hump of the dragon. That's the hump of the 10. That's what the blue reference lines are. And there's the 270 fair value. And there's the 200 period moving average. And we're right on the edge of weekly summer and winter. It just dipped into the winter. If we could see that closer detail, we'd see that. IWM, we need a trade frame on this one. No open positions. Real estate, a defensive sector, has been choppy and sideways. Strategy needed. Simon Property Group, we are 2 scoops short. We are at break even on the second swing position short, and it ended in a little doji and a slight upward move. This blue line was where we were going to add a position, a third position if it broke, but it didn't. So now we got to decide where to put our stop. Our initial risk was here at the hump of the dragon. Now where should we put our stop, and what should we do with that position? SPY. We'll talk about that one when we get to the market health check. I suppose we could look at it. That's had 2 days up in a row after a rebound. So this is from the daily health check, so it's marked up more than the others. So this blue line was Monday's open for at the start of the week. That's over here. Then sold off harshly and then had 1-2 days up. This was yesterday's daily range. That's the auto entry and auto short. This was a PSAR reversal. This one is the RL270. This is the 10-day high. That's the hump of the dragon, the hump of the 10. And that's the PSAR flip at the top of the stack. This is the RL10 belly. This is the the Z2. This is the belly of the dragon. This is the belly of the RL10 from way over here, if you could see that, and the 200 and the 10-day low. Then this was the Z3 line. Okay, so we need a strategy for S&P, and that's market health check, and it's in the winter, you'll notice. Treasuries have collapsed after a nice long run. It was a PSAR flip today, and it's right at 270, the long-term fair value. It had just crossed into the summer, but now what do we want to do? Oil. No open position. Seems to have bottomed. RL10 is rolling up, has crossed over its 4-period moving average, the baby dragon, getting ready to cross over the dragon itself, but it's still in the winter. There's the 200, there's the Bollinger Band mean, there's Z1, so we need a strategy for energy and oil. Wheat and precious metals, a proxy for the precious metals defensive play sector. Need a trading frame on that one as a defensive play. It's in the, just went into the spring. Win, we have no open position on it. We need a trade frame. That's a frog champion. Basic materials, resting on the 200-day moving average. Energy sector, XLE. One, two, three with a 1 day positive just entered the dragon. The RL10 has rolled up and crossed its baby dragon here. There's fair value. There's the Bollinger Band mean. There's the 200-day, and it's deep in the winter. Financials. It's in the winter. Slope of the 200 is up. Slope of the river is up. The 270 is up. Got a crossover of the baby dragon. It's in the middle of the dragon right now. There's the 30. There's the PSAR flip. There's Z1. Need a trading frame and a plan for that. And then finally technology, XLK, sector spider. That has been long and strong. Had choppy, sold off harshly, and had a up, higher, low, and up. The belly of the 10 is higher at each time. Getting ready for RLXD at 2 days of up in a row. There's a 90, there's a 270, there's Z1, there's a PSAR flip. Just happened today. Noticed how wide that is. Need a strategy for what to do with that sector. Okay, so that's 10 minutes and 20 charts, and some open positions we've got to manage, some that we've got to frame, some we just need a strategy and a contingency plan. Okay? We will see you in the boot camp, and we'll come up with our plan during the day on Friday to carry into the weekend. Then we'll review it again in more detail over the weekend after Friday's close. Candidatus Capital, keep your risk measured and your powder dry.